Hi everyone and welcome to this UK crypto tax guide for beginners. I wanted to put together a video answering some of the more basic questions I get asked and think this will be useful for a lot of crypto investors in the UK, because if you've ever wondered how taxes work for crypto and how HMRC views this when you're looking to take profits, if you're thinking of working this out for yourself or looking at using an automated crypto tax platform, or you already have an understanding about crypto tax but just wanted to go back over this and check your understanding, then this video will be for you. And I'm pleased to welcome back on this channel Jamie Nuttall, one of the leading voices and experts in the UK right now on crypto tax, who's the head of crypto tax and partner at one of the best UK crypto accounting companies around in Miner. This video will be the first of two parts on UK crypto tax for beginners, so keep an eye out for the second part that will be released soon. So please do like the video and subscribe to the channel so I can continue to offer more content for you in future. If you follow our social media channels on X, Facebook and Instagram, you'll receive daily crypto and financial education news update posts, which will keep you informed. Stick around to the end of this video to find out what services Coin Knowledge offers. Just a quick reminder that nothing contained here is financial advice, and let's jump straight in. Hi Jamie, welcome back on the channel. I know it's been a while since we did a video together. Introduce yourself again for anyone that hasn't watched our previous videos and maybe give an update. I know you're award-winning now, so.
Thanks, James. It's a pleasure to be back, mate. Yeah, it certainly has been a while. I think it's been about a year now. So, yeah, my name is Jamie Nuttall. I am now an award-winning crypto tax advisor within the UK, director and co-owner of Miner Accountants. I also go by the alias of Crypto Tax JME on social medias as well. So hopefully today we can go through some of your burning questions and sort of recap, I guess, on what's happened in the last year, if there's any changes, and go through the fundamentals once again.
Yeah, definitely. I know, kind of speaking from experience, you're one of Miner and kind of yourself, you're one of the leading UK crypto tax companies, aren't you?
Yeah, we're one of the leading crypto accounting firms within the UK for many reasons. One being I'm a DGen myself, to be perfectly honest. So whatever my clients are doing, I have a pretty good idea. And if I don't, someone in the team would, as to what's going on with your particular portfolio, which helps with the tax treatments. The other reason is we have about 99% crypto clientele. So we have a lot more experience throughout the years going forward, as we're doing much more at any given time.
I think this is a good point, just before we jump into the questions on kind of crypto tax, crypto accountancy, to say that nothing that we talk about is financial advice. If you're looking for specific advice, really based on your personal circumstances, then I think the thing to do is to contact Jamie and Miner directly. And the way to do that is I've included a link it's an inquiry form link in the description of this video. So if you just click on it, fill in your details, then that will go directly to Jamie and Miner. Also, if you've got any questions or specific questions based on what we talk about in this video, please do add them in the comments, as we will take a look kind of moving forward. We'll try our best to answer them either in the comments or in another video in future. So Jamie, what would be considered a disposal? So if you hold cryptocurrency, what is a disposal?
That's a very good place to start. Now, the reason why it's important is because that is when the taxable moments arise, is during a disposal predominantly. Now, this can be a sell, a swap, a trade, a gift. People forget about that. And even loss of assets can constitute as a disposal because you no longer have beneficial ownership of the asset. So whenever the quantity of asset that you have goes down, chances are it is a disposal. Most of the time it is taxable. The main one when it isn't taxable is if you do gift your spouse or husband, wife or civil partner crypto assets, then that won't be a taxable moment.
Yeah, and I think it's most people will understand the selling your crypto assets. So selling your cryptocurrency for, let's say, fiat, and kind of off ramping and going, and they'd understand that process. I think a lot of people don't. It's hard really to fathom that swapping one cryptocurrency for another cryptocurrency is a disposal of that cryptocurrency and is therefore taxable if you've made a gain.
Yeah, most people think that is when you go to fiat when it's taxable, and that's not the case in the UK. I believe that's the case in certain countries, but not the UK. So it is when the quantity of the asset goes down, i.e. you lose beneficial ownership of some of the asset or all of it.
Yeah. So then I suppose the next question is then what tax is due after the disposal?
So, assuming you are a UK resident for all of these questions, of course, as that's the area of expertise that I can help with. If you dispose of your crypto assets, you are going to be paying either 18% or 24% taxes from today onwards. This changed on the 30th of October 2024 from 10 and 20%. Now, that is determined by the marginal rate of tax that you will be paying overall in your total situation. So, for example, if you have £30,000 worth of PAYE income, for example, you will have approximately £20,000 of your gains could be in your basic rate band at 18% tax, and then anything above that will be at 24%. Now, don't forget, you do have your annual exemption as well, which is £3,000 this year per person, and it's tax year, of course, whereas previously it was 6,000, and prior to that it was 12,300. So they really have shot it down.
Definitely. And I think we'll probably be going into more detail of that. If that's a bit confusing for people, then we're going to do a slightly more advanced video. So I think that will come into that. And also a separate one in terms of how you can reduce your tax burden slightly using all those mechanisms. So I suppose the thing is that you might be in a position as a crypto investor or a crypto holder in the UK where you've swapped a cryptocurrency or several cryptocurrencies, or you've made your capital gains by simply still holding crypto, but you still therefore then owe tax to HMRC and have to pay that in fiat. So you have to find that money from somewhere, I suppose.
Yeah, so this is a very common issue where people go from, say, Bitcoin to Ethereum and crystallize a big gain, and then they go into from a bull market to a bear market where the value of Ethereum, say, drops, and they still have that liability from the crystallization of gains by moving from Bitcoin to Ethereum. Even though they don't have anything in fiat, they have to pay the taxes. And in some cases, depending on what assets you go to, maybe it's a mid cap or low cap or something like a meme coin where it drops to zero. Unless you crystallize those losses in the same tax year, you might have a tax burden that you can't afford because you don't have the liquid cash to pay it.
And if we kind of move on from that, then that's capital gains tax. So we've talked about a disposal. Capital gains tax is due 18%, 24%, lower, higher rate. Is income tax ever due?
Yeah, there's a few normal situations, I guess, when income tax would be due. Now, this would be on staking, rewards, mining, sometimes airdrops as well upon receipt, depending on the situation. And this would be subject to your income tax rates of 20, 40, or 45% taxes, but no national insurance. Please do remember that, guys. There's no national insurance on it. You might also be able to use your £1,000 trading allowance in certain situations, which means that effectively the first £1,000 of your staking rewards could be tax-free.
So that would just be added onto your any other income you have, I presume, and then it's worked out together?
Correct. So with the self-assessment system in the UK, you don't just submit a capital gains tax return and then a personal tax return and then other. It's all within one package, if you like. It's all together because they affect each other in terms of where you're going to be taxed within the bands, because it kind of relates to each other. So it's all done together. Yes.
I suppose then, therefore, if someone is paid at PAYE, they have to do a self-assessment on top of that.
Yes. So if you do a self-assessment because you've got some self-employment and PAYE income and you've got a few, some capital gains, yeah, you would absolutely have to include your PAYE income in there. It's not so that you paid more taxes on your PAYE income. It's just because it affects the other pieces around it as to what marginal rate of tax you would be paying. So yeah, 100%. Yeah. A lot of people forget that if they do that themselves, and they get a letter from HMRC saying it's wrong, you haven't included this, and it tends to push their income into a different bracket, therefore pay more taxes.
Yeah, exactly. Worth looking into. When is that due? Obviously, this is HMRC we're talking about. You have to report that to them. When, like in terms of the time of the year, when is that due? When do people have to report it?
So the tax year runs from the 6th of April to the 5th of April each year. So let's take the 2025 tax year. So that'll be 6th of April 24 to the 5th of April 25. You would have up until the 31st of January 2026 6, so you got a full 9 months to submit a tax return online and pay your liability. So you've got quite some time. If you have to do it by paper, now this tends to be for those like who are politically exposed or who are QCs. Certain individuals have to do it by paper, or some people might have to because they are technologically inept or unable to. Then that has to be done by the 31st of October 2025 in this scenario. So you got a little bit of a shorter deadline. The deadline to register would be the 5th of October as well. So there's enough time for you to get your UTR number. If you already have one, you don't need to register every year. So to recap, the deadlines are the following January for payment and for online submission. If you can't submit online, it's the 31st of October prior to it. To register would be the 5th of October. And in case you want to code out your liability, now this is a bit of a tricky one, you have until December to deal with that, but we won't go into that because it gets a little bit more tricky and we can open up a can of worms into all sorts of deadlines. The final note on that, James, is if you have payments on account, they would be due by the end of July. So that would be the following July after January. So there's a fair few dates there, and they're the most notorious ones that you need to know about.
Yeah, that's a lot of dates. So if I've got that right, in April is the financial year, which I think most people know. You then have, if you haven't registered already, you've got till October to register. And then if you're doing it online, then you've got until the January. So you've got from April to October to January. Is that the core 3?
Correct, yes. And payment is also in January. Second payment's in July.
I think we'll come back to that in a bit in terms of some people might not be this tax year, there might be previous tax years, but I think we'll come back to that in a bit. Especially for people in PAYE, I think most people who invest in crypto are aware of self-assessment and in most cases do it anyway. If people are in PAYE, they might be used to everything being worked out almost automatically. Do crypto investors need to work out their own capital gains tax and then report that?
Yes. So this is a self-assessment. You have to assess yourself on the tax liability. Now, this is traditionally for things outside of crypto and Web3. So this could be a self-employment perhaps, or maybe it's a bit of miscellaneous income. Maybe you've got some rental income. So these types of reporting can be fairly straightforward in some situations. So you've got rental income in, you've got some expenses out, you got your net profit, put that down, you pay taxes on it. And then the software or HMRC system will calculate how much tax you pay and when. It tells you the data. Fine, easy. The problem with crypto is finding out what the costs are, what other allowable costs are on top of that, your base cost being carried forward, the actual market value at the point of disposal can be very complicated. So yes, you'd be expected to calculate that yourselves. Luckily for them, if they can't do it, there's plenty of wonderful YouTube channels like this, James, where you help them understand this, because it's better to know what you don't know, if anything else. And then you can proceed to actually trying to, what I call, reconcile the data appropriately. Once you have that, you put it on the tax return itself in the appropriate boxes. So yes, you have to calculate it yourself. The onus is on you. And if you can't do it, if only there were an accountancy firm called Minor Accountant that can help you do that.
How do you go about working out? So if you have to work it out as an individual, how do you go about working out capital gains tax, for example, at the cost basis?
Yeah, I'll try and keep it crypto specific. It's difficult is the answer, James, in a lot of situations. Now, if you've got a small portfolio where you do about a couple of hundred transactions, you should be able to use any commercial software out there. There's a few that would work quite comfortably depending on situation. Again, it depends if you're with small caps, mid caps, maybe you're just with the top 10, maybe you've got NFTs or ordinals. It really does depend what you've got there. But if it's relatively straightforward and you've got very few transactions, under 200, you'd have to obtain the data by CSV file or API integration, put it into some form of crypto tax software. Now, this doesn't give you the answers, but it puts it all in one place. And then it also highlights certain issues. Some of them will tell you where there's missing cost basis. Some of them will highlight other issues. And you kind of work your way through it. Now, if you've got very few transactions and it's solid data, then there won't be much you need to do. Just need to check it, and then you can generate the reports and you are done. Most situations there's missing data, like you said, the missing cost basis, market value. So how do you do that? Well, you need to go through the software and figure out where the missing data is. Depending on software, it might highlight it for you, it might not. And then you need to override the costs with the appropriate costs using either market values online from, say, CoinGecko or something like that, or maybe you have some other trustworthy source to update that data. Now, this is both for the purchase, the sale, it could be anything in between. So it is, and that's just the tip of the iceberg as well, James. You also have to go through it to make sure that any airdrops are appropriately accounted for as well, because it is a subjective tick box whether you did anything to receive it or not. So the software will never know that. As an example, maybe you have rebasing tokens. That's a whole new ball game in itself. Maybe you've got something like nodes, which is not as common lately as it was a couple of years ago, but maybe you're looking at that a few years ago. So when you do put money into nodes, because you have to sort of fund it, if you like, in situations, the system will say it is a disposal, which is correct, but it doesn't also mark it as a cost to the node necessarily. So when you're generating income from a node, which will be under income tax, you can expense anything that's wholly and exclusively for that node, which could be some form of weekly or monthly upkeep fee, if you like. And the system won't pick up on that in most situations. So yeah, I would love to go through every single possibility, but these are the main ones, if you like, and it's just going to get more complicated the bigger your portfolio is, and of course, the more complicated your actual investment types are.
Yeah, that's quite complicated, going to nodes and electricity and all that's a minefield, isn't it? So I think maybe we can come back to that in the more advanced video. We can link that to mining and airdrops we can touch on in those ones. So just coming back to like the capital gains tax and how to work it out, I'll ask you about cost basis as well again in a minute. But if I'm right, I think you have to have your cost basis, and normally that's better just to kind of plug it into an automated kind of piece of software to see what it's like. The downside of those automated tax softwares online or the platforms are that there's often gaps missing, especially if you use a different blockchain. So you might need help to do it. And if you're trying to work out the cost basis as an individual without using software, that's quite mad because it's a bit of a nightmare.
Yeah. So if you're not using software, you should really have under 100 transactions. It may be under 50 transactions in total. Now, you and I both know in the crypto space, it's very easy to get 50 transactions. And the reason for this is because in the UK, we have something called Section 104 pooling. And this is a mechanism in order to calculate said base costs. Other countries have FIFO or LIFO, first in, first out. Other countries have, many different types of things anyway, but we have Section 104 pooling. And the software deals with that for you for, I think the cheapest you can get is literally free for it to deal with that. It's everything else around it that could be the issue, mainly the data input.
I know it is quite complex. Trying to work it out for yourself. Are you saying you take the average? So cost basis is the average, unless it's within a certain time frame, like 30 days or?
That's exactly it. So you take the average weighted cost for the asset, say, call it Bitcoin, for example, you separate that to Ethereum. And this is across all your wallets. It's not per wallet, it's across all your wallets in the UK. And you take the average cost for all of it. So maybe you bought it on day 1, day 50, day 105, and it gives you the average cost per Bitcoin, if you like, or even per Satoshi. Now, there's also a rule that says everything within 30 days is calculated before that. So you have that sort of catchment where you try and crystallize a loss. You can't buy it back within 30 days, sorry, because it links to 2 transactions. But before even that, you have a 1-day pool as well. So you got the 1-day pool, 30-day pool, and then everything else to calculate the base cost, which sounds very complicated. The software does it for you. So always use software.
Yeah, exactly. And you're also, your transactions will be in different amounts as well. So you have to factor in the different amounts at the different times.
As in the dates and the quantity of assets you're buying as well as costs.
Exactly. The quantity of, let's say, Bitcoin you gave as an example, you're not going to be buying the same quantity of asset each time, which will make it easier to work out. It'll be different amounts at different times.
Yeah, that's exactly it. You're gonna, if you buy one Bitcoin one day because it was worth, I don't know, 50 quid at the time, you're not gonna buy one Bitcoin necessarily when it's worth 80 grand. You might buy 0.0005. So yeah, it does take all of that into consideration for you.
Yeah, exactly. And then when would it be good to use someone like Miner, like a crypto tax accountant? When do you see that being particularly effective for clients?
The obvious one is if you just don't want to deal with it yourself, which is fine. Your time is valuable. Is it more beneficial for you to be doing what you are good at, making more, if that makes sense, than it would be for you to deal with this specifically? So, for example, let's say my fees are £2,000, and it's going to take you 6 months to deal with this on and off, and it will accumulate to your time being worth £5,000. Naturally, you go, well, I might as well just outsource that to the professionals who will get it more accurate, who have more experience, and can I help me across with that process? So that's the first one. Is it worth your time to deal with it yourself or not? The second one is if it's just too complicated. If you just can't deal with it, you're in a situation where you're going, oh, hold on, nothing in here is making sense. I'm not too confident, and it's going to really swing whether I'm making a loss or a gain. So that's the second reason. Third reason is if you just want to know exactly what's going on and you want some external help. So you might go, I'm pretty sure I don't have anything to submit. I want to know where I am because I'm coming up to what I expect to be a bull market, and I want to crystallize some gains. I need to know some data. So that's kind of a half next one, where you're trying to tax plan going forward. You want everything historically to be dealt with, because here's the thing, James. If you want 2025 tax year to be correct, everything that precedes that has to be spot on. I cannot just reconcile 1 year and it be correct. It has to be everything, unless there's a big gap where you sold everything and then you don't come back within 30 days as an example. Most of the time, I need to deal with everything. Now, the final reason why you might need us, and this is the scariest one, is if there's a time pressure from HMRC. If you've got a brown letter from HMRC saying you need to deal with this by this date because you haven't already, and we suspect that you need to, then that's probably when you want to get in touch very, very quickly with me, and we will deal with it on your behalf, because we can probably deal with it quicker than you can 99.9% of the time. And there's also a third party looking at it, so you probably want to get professionals, a firm that specialize in it with awards attached to their name.
Definitely, I was thinking the same. I was thinking time. It can be quite time consuming, and the knowledge. Someone or a firm, or Miner, you in this case, that have done it so many times, you do it on a daily basis. You could just take care of it, and it's right. And in some cases, can save obviously on tax with that knowledge. Obviously, a lot of people, especially if they've got businesses or something like that, they already have a traditional accountant that they work with. But I've had a number of calls with people that are basically saying, my traditional accountant doesn't really know much about crypto. Do you come in at Miner with that as well? Like, for example, you could work out the crypto side and the person could keep their traditional accountant. Do you offer both services? So
I love the fact that you call it a traditional accountant.
sorry.
No. I know exactly what you mean. It just makes me smile a lot. I was once upon a time a traditional accountant. But yeah, so we're actually getting more and more clients come through with that request, and we absolutely can do that. So there's two parts to the job. There's the usual tax stuff once you've calculated everything, and then there's the actual calculation of the data, of the market value, trying to get all this dealt with from a bookkeeping perspective, if you like, the reconciliation. We absolutely can do that part for you and not progress further. And then you can use that whether you submit it yourself, whether you submit it with another accountant, whether you just want it for your records so you know what's going on. There's not a problem. We have no obligation to deal with it in its entirety. We can do one or the other. We wouldn't want to just submit things for you, because it's going to be very expensive for you to do that, to be honest, with us. But we are more than happy to just deal with the reconciliation and work with your current traditional accountant, as you say, because I know when you've got that relationship with your accountant, if you don't have to, you won't leave them. You've trusted them. You've been with them for a while. You understand each other. So I would not ever want to encourage you leaving that person. But I'm more than happy to step in and help with the bits that are a bit more complicated, or they just want to outsource.
Yeah, and for those that do want to move across to keep it all together, can they do that as well or not?
Absolutely. So we are a normal sort of accountancy firm, if you like. So for example, I'm a fellow member of the ACCA. We've got people in our firm who are members of ACCA or ACA, AAT, ATT, all of these different accreditations, just like any other accountancy firm. So we absolutely can deal with the traditional part of submitting tax returns, CT600s, general accounts. The only thing we don't do is at the moment is auditing. We don't do inheritance tax planning, but we do most other things.
Yeah. See, I've got you saying traditional now as well.
It does help. It does help differentiate whether I'm talking about the Web3 crypto element or a normal compliance-based. Exactly. I just say traditional. It's easier.
Yeah. But yeah, I just wanted to get you to explain it that you are a very qualified firm. So that ends this video. And as always, if you have any questions on crypto taxes in the UK, please add them in the comments and we'll do our best to answer them there or in another video if possible. Because it certainly is a bit of a minefield and quite stressful if you've made a lot of transactions over a period of time, or if you're looking to take profits and just aren't really sure how to work this all out. So having someone there who's qualified, experienced and knowledgeable in the field can save you a lot of time and ensure it's done correctly. And I'd just like to thank Jamie for giving up his time and sharing his expertise here with everyone. And if you're interested in getting specific crypto tax advice with Miner, then you can contact them directly using the link in the description to this video, which will take you to an online inquiry form, and you just need to add coin knowledge in the referral box so they know where you've come from. And a great starting point is also Coinly, the automated crypto tax software that I did a video on my channel also, and there's a link to sign up for a free Coinly account in the description of this video. Just a reminder that if you're interested in more of a tailored approach to your crypto education, and you think you'd benefit from having someone look over your shoulder and guide you on your journey, I do offer one-to-one coaching to those who have the desire and the means to educate themselves further. And there are links in the description where you can message me booking a free video call to see if we'd be a good fit. I've also included a link to Trezor's website in the description for anyone looking for one of the best hardware wallets or cold storage out there in our opinion, with two new models in the Trezor Safe 3 and Trezor Safe 5 that I actually did a video on. You can find a link to here and in the description. Linked with that, we're pleased to have partnered with the #1 best-selling crypto seed phrase storage company in CryptoTag. And I've included a link to their official website in the description of this video for anyone looking to protect their seed phrase, which is vital. If you're looking for a portfolio tracker for your crypto portfolio, then I've included a link to CoinStats in the description of this video, which is the leading crypto and Bitcoin tracker on the market. And finally, if you're based in the US and are looking for specific crypto tax advice based on your personal circumstances, I've partnered with a leading US crypto tax company in Crypto Tax Audit, and I'll leave a link to contact them directly in the description of this video. And if you found this content interesting, please do like the video and subscribe to the channel, as it really does help. And have a great day.